Good day, traders, and welcome back to another episode of Crypto Vibes with Vault. Hope everyone is doing all right. And in today's episode, I'm going to cover a little bit about the macroeconomic factors that would affect price in the foreseeable future and what we can see its effect on the risk assets such as crypto and equities going forward. So, if you want to keep yourself updated with such topics, make sure to hit that like button and subscribe to the channel so that you do not miss out on these important updates. Now, today I'm going to start off with something different. Now, this is the US inflation rate versus the interest rates since the 1970s. Now, if you look at the historical data, we can see that whenever there's been a rise in the inflation numbers, the Fed were basically forced to raise the interest rates well above and beyond what the inflation numbers were in order to curb down, in order to suppress demand and curb inflation. You can see it over here, you can see it over here, and then throughout history as well. Now, this obviously is the 2008 global financial crisis where basically everything crashed and to be frank, if people won't have jobs, won't have home, the CPI index would obviously come down, and as a result, the inflation numbers would come down. So now, yet again, in the most recent data, we're seeing the inflation numbers rise substantially, which could be a lagging effect of the 2020 pandemic. And obviously, now we're also seeing supply chain disruption from China, Russia, and now India, who are restricting the number of exports, the number on exports. So now these are not made up numbers. You can Google it yourself. This is available. This is freely available on the internet. And I guess the general narrative around the inflation numbers and the economy, US economy, is that the Fed are going to continue the rate hike, and as a result, probably sacrifice the stock market, or rather the risk assets and the equities such as the stock market, crypto, etc. What the Fed are trying to do is that they're probably trying to save the bond market and the US dollar. So don't be surprised if you continue to see these rate hikes going into the future, or at least we're expecting 50 basis points till September, and then probably we'll see a 25 basis point or a lesser number of rate hike because the Fed would want to see the lagging effect of the back-to-back 50 basis point interest hikes. Now, obviously, if things do not go as the Fed planned it to be, if the inflation becomes sticky, then obviously things could get much worse. And some of the analysts and some hedge fund managers are predicting that this recession would probably look like or make the 1920s recession look like kids stuff. So that is what the general narrative around inflation and interest rates are. Obviously, things can change and inflation can come down if what the Fed planned to do comes to fruition. Now, moving on to the charts. One of the reasons I think that we're seeing such an aggressive sell-off in the market is not because of the interest rate hikes by the Fed, but the fact that a lot of large fund investors now think that the Fed might be wrong. Because last year, if anybody paid attention or anybody is aware of these macroeconomic factors, the Fed predicted, or the Fed called, that the inflation was transitory, and obviously they had to acknowledge the fact that they were wrong and that inflation is not transitory, and it could end up being a sticky inflation now. What the Fed constantly talk about is that they're trying to create a demand destruction to take inflation down. However, this is not a demand pull inflation, rather this is a cost push inflation. So a lot of hedge fund managers are again thinking about the fact that the Fed might be getting this wrong again, and hence the aggressive sell-off in the market. Obviously, this is one of the theories, but it kind of makes sense to me, so I thought I'd share it with you guys. Now, Now, if you've been watching our videos frequently, you'd know that this is the range that we've been working on for quite some time now. And in the previous episode, I talked about this sweep, which should result in a bounce in the market. So if there was any place the market should have bounced, it had to be this. Turns out that this is kind of a key level of SR in the market now, and we did see price push higher from this level after sweeping these lows. So we got approximately like a 24 to 25% bounce from this level, but things are not looking very bullish right now, because obviously the subsequent weeks closed bearish again, and now price tried to push higher, but yet again the rallies were sold into aggressively, and does not look very bullish in terms of price action to me. But the good thing is that as long as price holds above this level, or as a matter of fact, as long as we kind of sweep these lows as well, so sweep these lows and close back above this range, then I think that this could be a good buying opportunity, and the price could target higher, at least towards this SR and this SR next, which comes in around 35 to 36,000 level on Bitcoin. So now I guess these are the only two bullish scenarios that I can think of. I just talked about a sweep of these lows, close back within range, and or because we have already swept these lows, then price holds above the old range, starts to reclaim key level of SRs or resistance or supply at somewhere around this region, and then we can target higher prices, filling out all this inefficiency towards the lower time frame level of resistance around this area over here. So obviously if price starts to close back below this range and finds acceptance above this range, or is not able to reclaim this deviation, then I guess we would obviously be eyeing the high time frame targets that we have talked about on multiple occasions, which comes at around previous all-time highs of, or the previous swing high around 15,000, and then ultimately this untested level of demand, which is around 11,000. Yes, this looks scary. However, that is what the charts in front of us present right now, because you can see that there is no clear level of support, resistance, or demand in this move. So this is a highly inefficient move. So if price breaks below this level of support or this old range low, then obviously I would be expecting a much lower target to around the 10,000 to the 15,000 range. So this is what I'm looking at on the high time frame charts. Let's quickly look at the daily and some lower time frame support and resistance levels. Now again, if you see, this old range low has held price effectively till now. So tested it on multiple occasions, and it kind of break through this level. However, as I just mentioned, this is kind of the make it or break it level for Bitcoin. So buyers stepped back in, pushed price higher, but what happened next? It immediately got sold off. So this is not really a bullish sign, because if rallies like these aggressive rallies are being sold into, then this is obviously a sign that the sellers have an upper hand in this market right now. So I guess now we have to see is that in the coming few weeks, would we see another rally above these highs and then we get a sell-off, or we now break this level and continue down lower. Obviously, the quantitative tightening has begun, so the general sentiment in the market is not very bullish because there is no catalyst for the price to push higher. Um, if we do get a move higher, that would only be a short squeeze and not really a continuation or a reversal pattern for a bullish continuation higher. So watch out for that. Now on the daily, obviously, if price does manage to break this level, so one of the levels that I'm anticipating a bounce at would be this small cluster that we formed somewhere around 23,000. So this is a region where I'm expecting a small bounce if price manages to break through or break down. And another region would be around this accumulation cluster, which again is around $18,000. So these are the two high time frame levels, but that we could anticipate a bounce from if price again manages to break down. Now the two key areas that I'm looking for to short this market again if price manages to move higher is firstly would be somewhere around this region, which is the 32,500 region, above the old or above these highs. And then if price manages to reclaim this level, then this would be the perfect sweet spot for me to build on some of the higher time frame swing shorts on a lot of alts as well as on Bitcoin, because this level kind of comes in confluence with, I guess, the weekly level as well. So this would be, yeah, same region. So the weekly as well as the daily confluence at this level of resistance or supply. So I would be looking to build aggressive shorts or massive shorts at this region here. What this move will also do is that it will lure in all or a lot of retail investors. Once price breaks above these highs, a lot of people are going to think that the market structure has shifted, and now we probably would be going to all-time highs, and that would lure in a lot of retail or uninformed traders, and then again we would see the aggressive sell-off just like we saw over here. Price broke above key highs, retested the level of supply, and then sold off. And we kind of talked about this move in our previous episodes as well. So something similar to watch out for if price manages to break above these highs, retest the supply, and then sell off. So now obviously looking at the macroeconomic factors, it does appear, or it does seem highly unlikely that we would see this short squeeze push towards these highs, but you never know. Just preparing everybody for what we might see in the market form. Now obviously looking at the macroeconomic factors, it is highly unlikely that we would see a push towards 37 to 38,000 region, but just putting it out there in case we do see that push towards those that level of supply. Now on the H4 we had this key level of resistance or supply formed. Price formed a deviation and again aggressively sold off, retested, and then again sold off. So for me this level now becomes key, because acceptance above this level is a good indicator of the fact that the market wants to push higher, and we might see like a dead cat bounce or a counter trend rally towards probably higher time frame level of resistance, and we've already covered the level of resistance that we could see price push towards. So I guess on the H4 this is probably the only level that we should be looking at from a support and resistance standpoint. Again, in a bear market, what market makers generally tend to do is identify key swing highs, break above those swing highs, get everybody bullish, thinking that a key level of SR has been reclaimed, and hopefully the market will push higher, and then crash it or um, unwind those positions aggressively. So we do have a good level of clean highs at this level. So this is the first liquidity target that I'm looking for. Any deviation or any kind of false breakout above this level and a close back below, um, that is a good indication that this was probably a level or a move to lure in the breakout traders, and now price would aggressively reprice lower. So, but again, key level of resistance on the H4, so any break above higher should indicate the momentum is turning bullish, at least temporarily. Then again, once it breaks higher, a false breakout above this level, expect lower prices. So the price action is not very clean to trade right now. These are difficult or tricky conditions. In fact, not very easy conditions to trade in, and I expect these tricky conditions to continue at least till the Fed talk about quantitative easing or implements the quantitative easing, which is expected to be post September. So that's about it for Bitcoin. Let me quickly have a look at Ethereum and see what ETH is doing. Now, much clearer levels on Ethereum, and we did talk about these levels and what to expect from Ethereum in our previous episodes. So as you can see, price is retesting the key level of demand or the weekly demand on multiple occasions. So again, massive liquidity under these levels. So any sweep of this level and close back above, expect higher prices on Ethereum. Obviously, a break below this level and acceptance below this level, then I think that Ethereum is going to 1300 at least next. So yep, evident level of supply and demand on Ethereum. Clear level of supply that is capped price at least on one occasion. So any reclaim of this level, then I think it should push higher towards 2300 to at least 2400 levels, which again marks a key higher time frame or a weekly level of supply. And this is where it will get very interesting, because a reclaim of this would then indicate real bullish momentum. However, I'm not really expecting markets to push this high because the reasons I've already talked about recently. So I think we have covered basically everything. And lastly, this price action does look quite similar to this price action, where we had a key level of or key lows. Price swept these lows, broke below this lows, got everybody bearish, and then immediately repriced in the opposite direction. So something similar is happening over here as well. Broke below and then aggressively repriced, but the narrative in this occasion is different than over here. Obviously, because the inflation and all the macroeconomic factors that we just talked about. So just to quickly summarize what we just talked about, the Fed are obviously looking to suppress demand and curb inflation, and in that effort, they are willing to sacrifice the stock markets or the risk assets. Now, crypto is an asset class that kind of benefits from strong risk sentiments, and right now it's all but strong risk sentiments in the market. We are in a market cycle where the central banks are committed to slow down inflation and will not stop tightening financial conditions and make asset prices go down unless they achieve the objective and therefore be defensive. Now, Fed do have a target rate of 4% inflation till the year end, and but obviously there might be a lagging effect of the rate hike, which we have to look for around, let's see, around September. So that is about it for this week's episode. Goes without saying, if you guys found this insightful, hit that like button and subscribe to the channel, and I will talk to you guys soon. Take care. Bye bye.